All right, let's bring in Brad Gerstner. He's our first headliner of the day, the founder and CEO of Altimeter Capital. He joins us out from Los Angeles. Good to see you. Thanks for being a part of this week.
Hey, Scott. Thanks for having me, and happy 10th.
Yeah, thank you.
From Milken and all the investors out here.
Yeah, I appreciate it very much. How timely to have you, given the conversation that we were just having. From software like Snowflake, which are ripping, it's up 5% this week. Stocks are not that far away from a new high. We spoke 3 weeks ago or so at Delivering Alpha, which wasn't televised. Snippets of our conversation were played. You said at that point you were 55% net long versus 75 last year, and that the NASDAQ needed to come in fairly substantially from the levels that it was at a few weeks ago. It's going the opposite direction. What's going on now?
Well, listen, after listening to Josh, I'm all fired up, and I probably need to go buy some more stuff. But, listen, we're in the business of assessing probabilities, and there's a distribution of probabilities here. Everybody agrees that rates and liquidity are having an impact on multiples. And what I said is, we've decided that we're going to have a little less on, right, than we did at this time last year because multiples have come up a lot. Let me just give you one statistic. If the NASDAQ were to correct, if the growth multiples were to correct to January 2020 levels, pre-COVID, in January 20, nobody thought that multiples were too low. We'd have about a 30% correction in the NASDAQ. So I think when you're looking at the distribution of probabilities, whether you're playing from home or whether you're doing this for a living, you need to leave open the possibility that as rates begin to move up, as the world normalizes, multiples are going to normalize. That can occur, and at the same time, great fundamental innovations will lead to value creation that will continue to be investable.
Well, have you changed your positioning since we last spoke? Have you increased your long exposure by virtue of what the market seems to be doing? It's seasonally, as I mentioned already, according to notes and what we know from history's sake, is we are entering a period that's usually pretty good for the market.
I mean, Scott, every day we're in the market adding or subtracting, to positions, but we haven't had any material changes, and we're playing over a longer arc, right? Our largest position is Snowflake, which Josh, just talked about, an incredible business. We think will be much larger, 3, 4, 5 years from now. But if the market corrects due to interest rate corrections, et cetera, it too will come in. And so I think you just have to understand that you're playing in a market where valuations are at or near all-time highs, that there may be corrections, and you need to make sure that your exposures allow you to play through those corrections to buy more when things are up.